Nailed it to the second 8:36. So we're a minute behind. Your boss is okay with that. We read yesterday or the other day that most employers won't call you late unless you're over 6 minutes late. No, we're not encouraging you to be late. Mike Barrett's with us. Mike, how do you look at it?
I always assumed a second is late, but but I'm also speaking as the guy who's normally late. So, and maybe it's my own guilt that kicks in if I'm not there exactly on time. So
I woke up the other morning without my alarm clock, an hour late. My entire day was thrown out.
Oh, yeah.
All right. Good policies with Barrett Insurance Agency. That's why Mike joins us here on Tuesday mornings. We've had some great talks here. We had a chat last week about the importance of checking your fire and carbon monoxide detectors. Well, not just checking them, but making sure you have them.
Make sure they're worked and installed and where they should be, yes.
That's right. Because your family's safety is paramount. It is very, very important.
Yes.
We talked about snowmobiles and other winter things the week before that here. Now, here's a common one.
Okay.
You and I've always talked about this, how those 1-888, 1-800 whatevers in Minnesota, whatever, promised you the best insurance rates.
Yeah.
You call them and, you might have got a little better rate. But then you go and you tell your buddies at work, say, man, I just got a new policy from XYZ, and, my insurance went down $25 a month. At $25 a month, why don't you check them out? And he says, I did. But it was $75 a month more.
Mm-hmm.
How does that happen?
Exactly. There's 1,000,001 reasons why that happens. So let's do the basic ones, okay? So the most common, first and foremost thing that's part of a rating process for homeowners insurance and auto insurance, by the way, but we're talking homeowners in this example, is your insurance score, which is basically, I call it a credit worthiness score, so to speak. So it's not completely your credit score. It's not your credit report, but it's certainly tied to it. Let's talk about maybe a credit score or credit report being the size of Vermont in terms of the scope and detail. An insurance report or insurance score is more like the size of Lyndonville or St. Johnsbury or what have you. So it's very small, very finite, very clearly defined by the company what they're looking for. It differs from company to company to company and what marker you're going to hit. So that's an algorithm that we will never predict, but that is certainly going to be a big reason why your buddy is different than you in terms of cost. But that's just one of many. Another huge one, what year is the house built?
Right.
What condition is the house in? All right. What kind of heat do you have? How close are you to a fire department? How close are you to a fire hydrant?
How close are you to a brook or a river?
Doesn't matter. Does not matter. Does not matter. Brooks and rivers, unless they have a hydrant that's been professionally installed. And if you drive along Route 2, one of the easiest ones to see is on Route 2 when you're going through East St. J, kind of where Rod's Used Cars was, across the street on the Moose River. Concord, East St. J has one of those. All right, so that would help, but otherwise just having a body of water will not. What limit of coverage does your friend have? Do you have a mobile home insured for $35,000, or do you have a stick-built house insured for $325,000? Do you have a $250 deductible? Do you have a $5,000 deductible? Do you have replacement cost on your personal property, or do you not? I mean, we can go through an enormous list. And things differ from family to family, friend to friend. Policy types included in that. Somebody can come up to me and say, man, everybody I know pays so much less for insurance than I do. Why? Well, you have 25 cows in a barn. And I'm not trying to be facetious. I'm not, but there are very specific cause and reasons why you would have a real great difference in cost from one person to another.
Well, and your wife or your significant other may have a very valuable family heirloom.
Yes, you
that
have
is
some scheduled jewelry on the policy.
Insured stuff.
Yep.
Now, is it also to you liken it to like a credit score?
Mm-hmm.
I'm trying to be one of our listeners out there. Okay,
please do.
So, is it if you are a high insurance risk? For example, you lived in a mobile home that didn't have up-to-date wiring. There was a fire. You had a loss.
So that would never be tied to any of the consumer report or insurance scoring. That'd be part of a loss report that would only be there for the with a 3 to 5 year window.
Okay. Next on the list then. Well, John and Nancy have been paying their insurance 5 days before it was due for the last 15 years.
No impact whatsoever.
Okay, so Richard and Alice, they're usually a month or so behind, or we've had to reinstate them twice in the last year.
Not going to be reflected because it's not being reported to an agency. All right, so again, while it's not an a credit score or a credit report, it is tied to that enough that if this information is not being reported back to those central databases, it's going to be hard for companies to extract that information. Now, one thing that can, and I've seen this because it happened to me a number of years ago, my wife and I, we got her, it was a Ford Fusion. And at the time, Ford was offering like a 0.9% financing for 6 years.
Right.
We thought, well, that's a no-brainer, 0.6%. Or it was really low. You know, it was totally worth doing for the financing with a low APR. Taking out a 6-year loan on a vehicle adversely affected our insurance score. Yes, I know. That's the look I had too.
Well,
but again, companies, there are algorithms and studies that are done within companies, all the actuaries. They look at the statistical data, and their number one goal is to find probability of loss. So they're identifying, okay, well, what type of character, what type of person is more likely to have a claim than not have a claim? And that's playing a huge role here. There are some states that want to get rid of that because they think it's biased. And there could be arguments for both sides. But it right now is currently in place and will stay there for at least the foreseeable future.
That's rather interesting, though, actually, to be honest with you here. Because a while back, I was trying to get another car because mine was on its way out.
Uh-huh.
And I was offered a 72-month payment plan.
Yep.
Financing, there we go.
I'm with you.
On a car that was already 4 years old.
Uh-huh.
Okay. Now, made absolutely no sense to me because back in the day when I sold cars, 4 years was like the max.
Right. That's as far as you'd want to go.
Yeah, that anybody would finance. But I guess now if we think about it here, your car gets older and older and older. If you've still got it and you're still making payments on it, it may not be as reliable. Is this maybe in their thinking?
I really don't know. I really don't know. You know, if I was to try to get inside the brains and the working decisions of some of these companies, because they all differ. You know, I've got 10 companies that I work with regularly, and even more than that I work with, throughout the course of my week. If I tried to figure out how they all operate in terms of the backroom stuff, you know, I know their guidelines, I know their frontline requirements, and that's good, and that's where we need to be. But yeah, there's a lot of things at play there. It's no longer can you just go to somebody's kitchen table and just write insurance because there's too much going on to rate the risk.
Well, again, this is why we do our chats here called Good Policies, because if you've been doing it for this many years and you're still haven't got it, you know, absolutely 100% figured out why they do what they do.
Uh-huh.
I mean, you know what you do and you know why you do it and you do it well. But after all of that time, people out there that don't do it on a daily basis, they're going to have questions, they're going to have experiences that they're not familiar with. So.
Right. And it's important to have somebody that kind of lives, eats, sleeps, and breathes this thing. And that's what we do. It's easy for us to look at something. You know, you could come in tomorrow and bring me your insurance policy, and I could very quickly tell you my thoughts on whether you have adequate coverage, or if maybe you're a little underinsured, maybe if you're even a little overinsured, maybe if you have deductibles that are lower that if you increase, you would save some money. Million and one ways to do it. We look at it, we know it, we kind of like to stake our claim on the fact that we can look at these things and understand them. So.
All right. Well, tell them how they can pick your brain then.
Yeah, pick our brain. 748-5224. Visit us on Portland Street in St. Johnsbury, online, thebarrettagency.com. Google, Facebook, and YouTube is all Barrett Insurance Agency.
All right, my friend. Thank you very much. We'll do Good Policies next week again.
Absolutely. Maybe the Iowa caucuses will have been figured out by then.
Doubt it. All right, we go back to the music with Colby Calais and new music coming up from Nick Howard. It's called Fire. It's on the way.